So hello and welcome to the Christmas update on the Nexus portfolio funds. Sadly David is not here this time, he's unwell, and I have me stepping in on my own to present to you for the end of the year message. So to put the last year in perspective, we had a very strong performance from Dynamic, plus 18.85% year to date to the end of November, and Solutions also providing a very strong double-digit return of over 13%. Last month in November, again, a very positive month for both portfolios, with Dynamic up 2.3% and Solutions up 1.3%. Again, the benefits of broadly diversified portfolios have been shown to you over the last year of how they performed and reacted in market conditions. This month, we've seen US shares power to all-time highs. This is despite the concerns we've had about trade wars with Mr. Trump and the Chinese. These matters seem to have fallen into abeyance as markets generally look at the underlying PMI figures, which have been supported both in Europe, the US and in China, indicating that economic growth is still remaining resilient despite all the concerns we have on the politics. With a more positive message on the trade wars between China and the US, this has been very supportive as well of markets, and even despite the concerns we have in the UK over the ongoing election, etc. At the moment, markets are discounted, we should have a strong government in the UK, which has been broadly supportive of UK markets. We've also seen the pound strengthen over this period as well. So markets are discounting good news, but obviously polling are very ambivalent at present, and concerns over outcomes in the past have not necessarily been as accurate as one would hope. Therefore, we remain to err a slight degree of caution and await the actual outcome. The portfolios are positioned to benefit on either side. With their international diversification, this is not necessarily a factor that we are overly concerned about. As I mentioned earlier, it's been the US and the Japanese equities within the portfolio have been the standout performers. Again, this has been buoyed by the positive talks and the positive moves towards some sort of rapprochement in the US-Chinese trade war. However, given Mr. Trump, we must always have again an air of caution about how these pan out. The indications are at least there is some signs towards a positive outcome. This overall reduction in tension has helped broadly supportive of markets, along with some positive news from a number of companies. We've had some good results over this period, again helping the portfolios go forward, with strong stock selection helping us again. In the US, we saw Ares, the fund management company, have a really strong month for us again, and also companies like Netflix were very strong, but more importantly, United Rentals. United Rentals is an indicator really of how people perceive the strength in the US economy, as it's a just-in-time demand for supplying plant equipment. This again is a good indicator of the health in the broader market of the US economy. So, where do we stand towards the end of this year? We're able to draw some conclusions from how we feel about global equities and the world in general. We feel slightly positive, but we do not feel ready to abandon some of our stronger, safe positions in, say, gold in Solutions, and also our focus on the dollar. Recent strength of sterling against the dollar in particular and the euro are minor compared to where they've come from in the past. We don't believe, despite this period of quite positive growth, that we should give up all the insurance policies we hold within Solutions. In Dynamic, we're again broadly spread across global markets, with again quite a key focus on the US, but again this is through key companies that we cannot repeat elsewhere. And positions in both portfolios are relatively low in cash, about 4% in both. This reflecting our optimism in the short term, at least for financial markets. So looking ahead, liquidity and quality remain the key aspects which we've always endorsed within the portfolios. Bonds in Solution have had a very good year, but whether that's repeated next year in the current environment for lower interest rates remains to be seen. So again, some degree of caution about that. Real assets and secure income streams have been key drivers of performance, and to a large degree, equities have been one of the key drivers of this. The bottom line from us really is steady as she goes. There are still many things that could cause a slip between cup and the lip, but we remain broadly positive for financial markets going forward. Finally, on behalf of the team, I'd like to thank you all for your support over the year, and we look forward to that continuing into 2020. The best wishes to you all for Christmas and the New Year from all the team at Course Achieve It.